18 January, Wednesday. Alright guys, thank you for waiting for my MAO video. Got a bit caught up with some personal events earlier. Now, what should you do when the fund managers are getting positive? They are getting very positive right now. They think that the worst is over, inflation is coming down, and they feel that there should be more upside coming in. And that is where I get very worried. So I'll tell you more in detail. And of course, we have the latest update from BOJ. And seemingly, they're going to kick the can down the alley once again. Alright, before we go into that, make sure your risk assessment is being taken care of. And thank you, AIMS, for the kind sponsorship. Now, let's recap what happened last night once again. The Dow Jones plunged 391 points. Wow. And it snapped the 4 days winning streak. And it was pressured by Goldman Sachs shares. Okay. Goldman earnings wasn't good. Okay. It came out pretty bad. But the Morgan Stanley came out pretty good. In fact, Morgan Stanley up by 5.91% overnight. That is pretty good, right? So what's happening? Can we trust this thing from Goldman Sachs, or is it just going to be just a minor pullback and then we got going for more upside later? I'll share you more in details, but let's look at it. Now, Goldman slid 6.44% after the bank reported its worst earning miss in a decade. Oh my goodness, for the fourth quarter. Okay, so that is how bad it is right now. It's because of the decline in the investment banking I told you before and the asset management revenues. Yes, indeed, they didn't perform good. I've been saying this for the last few MAOs, and of course, the share price has been coming down bit by bit, but people just don't see it. So now we have it. But very interesting, Morgan Stanley posted better than expected of it, and it recorded high growth in the wealth management revenue. So it's like, hey, come on, man, the same thing, right? And the share price up by 5.91%. Okay, so Morgan Stanley and Goldman Sachs has almost a mirror image price action today. All right, it's really, really incredible. And do note we have more S&P counters going to release their earnings and about 7% today. So most likely we're going to see more problem coming up if you ask me. All right. So let's look at Goldman Sachs shares right now. Well, one single day fall have taken out 1, 2, 3, 4, 5 days of upside. One single day basically rub it off. Okay. So the question is, how low can it go? Well, I've given you before this number. The number will be 330. So as long as Goldman Sachs stays above 330, I think Goldman Sachs is still okay. But if Goldman Sachs loses 330, then it will be a free fall all the way to 295. Now, heavy volume was traded yesterday. You can see very heavy volume. In fact, the biggest volume for the longest of time. And even the last earning result itself, you can see we don't have such a thick and high volume. And each time when the share price gap down, Goldman Sachs share gets pushed up, right? But this time now, once you open, the selling keep on coming in, seemingly telling us that there could be more selling to come. So that's the reason why I'm kind of uncomfortable right now. But Morgan Stanley is a different story. Now, Morgan Stanley is different. Morgan Stanley now, the share price gap up, and it's going to go for the $99, which I told you is a strong resistance. And the support now is for $94. So as long as Morgan Stanley stays above 94, everything is good. Now, in terms of volume, right, also the highest traded volume for a long while, okay? So last time the earnings came in, there were a few earnings over here, and of course, you have three positive earning, one negative earning, but each time the share price goes up, all right? So it seems like the banks know how to play this game very well. So if the market shares continue, if the people think that Morgan Stanley is still good to buy, I think the upside could go as much as $99. Now for me, Morgan Stanley have been pretty accurate last year, and they've been pretty spot on with Mike Wilson calls. That's why I think that basically contributed to their wealth management. Yep. So as I say again, most fund managers are really, really optimistic. Okay, they think that things are going to be good. So let me play this video to you. It's a very short video. And you can see for yourself, right, why are they so positive? Hold on a minute. I think there's some PowerPoint issue. Hold on. Okay. All right. I think let me just bring it in right now. It's supposed to be a video, but okay, never mind. I just bring it in. Okay. Hold on a minute.
It does seem as if there's nowhere to go but up. There's simply a lack of downside.
Okay. I think there's some technical issue here. Never mind. Let me just bring the video in right here. Okay. Just give me a moment. Here we go. Okay, let's play back again. Let's go.
It does seem as if there's nowhere to go but up. There's simply a lack of downside catalysts, and therefore, the only way is up.
News cycles or bull markets, they start in pessimism, grow in.
People are starting to drop recession calls.
Okay, so basically this video tells you that people are getting very optimistic in short, okay? These fund managers are very young, look at it, they are very young. So they probably didn't see as what happened back in 09, or they didn't see what happened back in this 1999. So, well, let's wish them all the best, because whenever I see these people are getting so optimistic, right, I kind of worried for them, in fact. Oh, the video's working. Okay, so it's my bad. Okay, never mind, let's skip on. Okay, alright, now the trading flows are telling us a different story here. Okay, take a look, guys. Now, this is the trading flows of US equity. The short side itself is actually increasing. Interesting. Alright, that actually tells you that the people are covering their shorts, okay? They're covering, okay? Covering, and very important, they're covering their shorts here. And of course, the net itself is hardly moving. The long side is still pretty heavy on the long side. So basically, right, if the trading flows tells you that traders are maybe thinking that the upside is coming in. And of course, the S&P Managed Risk Index, the cash exposure, is still there. Alright, you can see every time when a lot of cash is on hand, the stock market actually pulls back. Alright, once again, if the cash is heavy, the stock market always pull back. So now the movement now is still relatively alright, but if this cash volume goes up, then the equity market will fall. So all I can say at the moment now, seemingly people are getting a little bit optimistic and they feel that the coast is clear. But if you look at it right now, you can see Ryan Cohen. Alright, there's a bit of PowerPoint issue here. Apology for today. It's a bit of a rough day for me today because of a lot of meetings on. Apology on this. Now, apparently now, Alibaba is one of the highly sought after stocks for a while, right? So it went down to as low as $65 back then, around this area. And then I did mention that if it crossed $74, then you can buy Alibaba, which it did. And I said that if it can go higher, it will go to 115. And truth be told, Alibaba reached 115. Right. The thing is this right now, that do you think it's a good time to buy Alibaba? Well, I will really say that let it fall. Let it come back down to about 95 range maybe, and then you can try to accumulate. To do it right now at 115, I think it's a bit high on the high side, yeah? Now, of course, activist investor Ryan Cohen has came in to buy stake in Alibaba, and he actually wrote there in his own Twitter, he says that, right, this share now is worth more money than not, alright? Now, who is this guy, in case you cannot remember? This is the guy who did this, okay? He's the guy who went in to buy BBBY at $10, okay? Alright, after he buy, yes, the share still go down a fair bit, alright? But then he found a base, and incredibly after that, the share price just shoot up all the way to this point here. I think it's about $40 if I'm not wrong. Okay, so something like that. And he made a lot of money by selling at the highest point. Oh gosh, okay. So he made quite a bit of money over here, and now he believes that this is the third time to buy into Alibaba shares. Because as you can see now, after he has sold the share, oh gosh, the share is now lower than his bought price. And it's like, you know, at a very deep in the bottom of the ocean. So all these tells you that, right, when these guys come in to buy, they know they are very good with this, but they actually, you know, they do those things to just make money. This is just a very simple capitalism game itself. So you need to be very careful. And I say again, maybe $95 to $90 you can try on this Alibaba. Now, of course, while the optimism is there, some people like Mike Wilson of Morgan Stanley disagree. So we can see now, right, this is the first area, second, third, fourth, fifth, sixth. And for some reason, it seems to be following this trend line. So if the S&P 500 is to fall below 3,900, then this chart is going to continue, and there could be a possibility the market could nosedive down below 3,600 mark. But of course, what's the reason? Well, there's good reason from Mike Wilson. Let's take a look. So to Mike Wilson, the chief US equity strategist at Morgan Stanley, this rally this year has been led by low quality and heavily shorted stocks, short covering, okay? And also, you also witness a strong move in cyclical stocks relative to defensive ones. And this move in particular is convincing investors that they are missing something that must be repositioned. So basically, because of this movement from to cyclical stocks, some investors feel that they have missed the bottom. They're trying to chase it right now. But truth to be told, all right, this is a powerful shift, but we also recognize the bear market have a way of fooling everyone before they are done. We are not biting on this particular head fake bear market rally because our work and process is so convincingly bearish that we must trust it. And I totally agree with Mike Wilson and his team. Seriously, we all know that the volume is not following through. Look at the volume, guys. It's not following through at all, okay? So all I can say is that this is just a matter of time. Things will get very ugly, and you just have to wait because the selling will have to come in sooner or later, because the Wall Street cannot like perpetually hold this forever. They need to break at a certain time, and I believe this is coming soon. All right, what do you think so? Leave in the comment box and let me know. Yep. Okay, so we just got the latest information on BOJ this morning about 11 a.m. So let's hear for ourselves what is happening now, because BOJ decided to maintain the 10-year JGB yields target at 0%, which is obviously, we know, is not very possible. But why are they doing that? Let's listen.
Lack of inaction was a surprise, but it wasn't either.
Exactly, and I think many people had this sense that why would the Bank of Japan move again so quickly? Look, they just moved on December 20th. It's January 18th. Even if they thought they might move again, why move now? It's true that after they widened the YCC band, doubled it from 0.25 on either side of zero to 0.5 on either side of zero, even as bond traders managed to push it topping that top of that range and forcing the Bank of Japan to buy even more record amounts of bonds. Why change it? It would be different if Governor Kuroda wasn't in his second to the last meeting today. One more meeting in March. By March, we'll know who the next governor is, and that governor is going to be taking over at the end of April. Governor Kuroda steps down on April 8th. I mean, he'll be the April 26th meeting is when he gets a chance, or she, to put their stamp on monetary policy. But for now, what was the really pushing force besides this having to buy lots of bonds? But the Bank of Japan's used to doing that. They've been doing it for some time now. So I think that was kind of like the logical conclusion. But there was another kind of sense that, well, look at how people are pushing on YCC, yield curve control. Why not widen the band again? Why not take it further? Maybe that will help calm down the bond market. So it was kind of almost like what people were hoping for or feeling. That drove them to look in one direction. Of course, that was traders, and we saw the yen strengthen so much. We saw this pushing against the top of the yield curve control band. But the logical, the reason or conclusion to come to ahead of this was to say, no, they're not going to move. So they didn't move. And again, press conference is coming. I assume that Governor Kuroda will give us all the reasons why nothing more has changed. I told you it was just a tweak. I told you it was just bond market functioning that we drove us. At the same time, the fact you look at the inflation forecast, neither in 2023 nor in 2024 does the Bank of Japan at this point, in its average consensus forecast, see it hitting at 2% or higher. That could have been a signal that even if they didn't widen the band, that they were leaning towards something they might be doing, leaning in a direction. It seems to me it's what they've done is just open the door all the wider to the next team, the next governor, to decide what to do and execute, however quickly or slowly they do it.
All right, so you can see what happened, and wow, look at the Japan market. Let me bring the chart to you right now. This is the Nikkei. It shot up heavily because everybody was expecting things to go wrong, but wow, the Nikkei is up by 1.44%. The high itself went up to 26,900. Now it's at 26,600. So there was an upthrust over here, and of course the dollar yen also shot up because of that, right? But you can see right now it has went up the high of let me just take a look here. The high went up to 131.5, but now it's pulled back all the way to 129.4. Why? Because definitely this just only kicking the can down. All right, it's not gonna help here itself. To me, this is a very wrong move in my opinion, and I can tell you this will not last. Okay, so you can see it did spike down. The 10-year yield of the US BOJ earnings, all right, went down to 0.375, but it's now back to 0.44. And I can tell you this, guys, this is going to break. Okay, I'm very, very confident that this is going to break, which means that once the market goes above the 0.5 again, we can see. In fact, yesterday it went up to the high of 0.592. All right, so this actually is a telltale sign that there's no resistance on top, even though there could be artificial pressing, but this is not going to help. All right, so once again, guys, be very careful in the BOJSI. I believe that something big is going to happen pretty soon. All right, let's look at the chart for today and see what can we offer for you. Now let's take a look. Now gold price maintained the downside because my KFC chart shows that 1921 is strong resistance, and for the last 2 days, as long as the market stays below there, the selling is going to come. So if you want to buy gold, wait for 1921 to be taken out by closing above it, then we can see gold going even higher. But well, like I say, that if that is only if it goes above 1921, if not, no, just stay there. Now for the Dow Jones, well, we can see that the band is showing in, but the level is still here for KFC. Now it came up very nicely to about the high was at 34,030, and then it pulls back right now to 33,900 area. Now honestly, this is I just feel that right, this is not going to be ending good, and there's a good chance that the Dow Jones will come down all the way to about 33,744 level. All right, and then you can see the Nasdaq. You can see it's inching up, pushing up, but you can see the weakness is coming in. So I don't think the upside for Nasdaq is going to maintain for long. Yep. Okay, so that is my KFC level. Let's use my TWB indicator for a better look at the market with it. Let's take a look. So what we have right now is the color change from yellow to red on the day chart, which represent selling pressure. But because the KSI indicator is green, while my KRW is red, so it basically contrasts each other. Hence, therefore, to me, it's alright. If the Dow Jones stays below OP, then there's a chance to see this number 33,722 in the near term. Once you come there, do consider take some profit. If you think it'll go lower, then 33,579 MA30 should be next. Alright, so watch out for that. For the Nasdaq, let's take a look right now. The Nasdaq today is trading below pivot 2 level, and below pivot 2, below OP is not a good sign, but it stays above MLP, so that is where the strength is. But the thing is that, guys, the KSI is red in color, and the market has been moving with a higher low formation. So if any time the market breaks below this area, which is about 11,465, there will be some selling, okay? No kidding. But the KRW is positive, so there's a bit of mix again. And the S&P 500 right now, let's take a look. S&P 500, it is trying to stay above the pivot 2, but it can't. 4008 is the pivot 2 level. So if we now go below MLP 3991, it will be a sell, guys. Below OP, below MLP, below pivot 2, it will be a sell. But because the KSI and my KRW both are positive, so that's why you can see the downside is really limited. It means that there's selling in the market, but you just couldn't press down. You need the indicator to turn red, and then the selling will really come. Okay. Now for the Hang Seng, let's take a look. Hang Seng now is trading at 21,680, although the cash market is closed, but the future CFD is still moving on. And then what you have right now, the BNB RL level is at 21,753. Today's high 21,765. So that means it got touched and pulled back. Do note today's a DJDD day. So if the market pulls below OP, the selling will come in. But it's tough because KSI is green. Oh gosh, okay. So that's why if you look at the 5-minute chart, I got a quick one for you. You will notice that you stop at KTR -1 to -2 area. And all these are picked up by my system. See? Oh gosh, incredible. The market came down, touches my KTR -2 perfectly, and then rebounded all the way. What a run here itself, guys. So you can see, once you have your indicator, your KSI indicator is there, you can almost feel it why market will always rebound from the bottom, because the KSI day chart tells you that. Very powerful system. Yeah. Okay. And then what we have is the Nikkei. I showed you earlier that it was a cash market. For Nikkei, for the CFD market, very clear. They have a green arrow there. Green KSI, blue cyan. All right. So these two already tell us that today there's a chance that the boys have already know something. That's why they've been buying. And truth be told, the market brought up all the way and went to a high of 26,902. So the target will be 27,064 if the buying continue. But if the market goes below BNB RL, which is 26,532, then you must wait for a while. Yeah. But at least from here you can see the green arrows, because everything's aligned. And you go for buy, you are really in the driving seat. So once again, this TWB system shows that how effective this is. All right. And of course, if you put it into dollar yen chart, it also should be able to show you the same thing. KSI was red in color, KRW is red in color. So initially the price action blasted all the way up to 131.47, which happened to be the MA30, but it couldn't go above it, and then it pulled back all the way now to 129.30 level. So once again, this tells you that the power of the BNB resistance, and also together with a stack at MA30 gave the stronger resistance of why the market pulls back right now. Alright, so all these are able to be presented as long as you know what you're seeing and you follow the rules, you should be fine. Now for pound, you can see it's kind of like sideways, but it's aging upwards. Pound, let me just try to make the chart clearer. KSI green, KRW cyan, that's why the green arrow is there, and that's why the pound is moving up. First target will be 124.31 level. Yeah, that will be pound. And of course for euro, well, we have a interesting movement. KSI is red, but then it's basically finding strength and it stays above pivot 1, is bullish. So as long as it stays above the BNB RL level, which is here at 1.086, right, it should be able to climb towards 1.10. Okay. All right, so that will be the indices, the forex. Let's look at the commodities right now. Like crude oil, let's take a look at my crude oil. Where are you? Okay, DAX is already open. Let's take a look at DAX. Okay, DAX is now trading below pivot 2. It's trading below pivot 2, below OP. It's a sell already by default. And now watch out for MLP. 15,143 is a sell if the market couldn't hold above it. Because KSI is red, so that means that the price action and KSI is coming together. If the market loses 15,143, the selling should be able to bring it down all the way to the first BNB SL, which is at 15,078. Anything lower, my goodness, the next level can be as low as 14,888. Whoa, what a hot number. Yep. Okay, alright, so where's my crude? Let me just bring my crude in. Here we go, crude oil. Now, I've been telling you guys to buy crude oil and been saying this for a long time, and you look at the crude oil, blast all the way. It was breaking above the BNB support level right here. And once it crosses, I told you, you go to the BNB RL level, which is at 81.44. Touch. Beautiful, guys. We've been long since here. Congratulations for those who have been going long with us, yeah? Okay, so where can it go right now? We have a problem, guys. If it goes above the high of this year, that means that this could actually spell more trouble for inflation, right? Because last one, inflation, it was because the crude oil price was cheap or lower. That's why the price of the CPI data was much lower. But if the crude oil starts to move out on its own, then 86.30 will be the first target, 86.30. And if that really happened, I tell you this, you're going to ring the bell so hard that it will freak people out. All right, so be very, very careful of what I've been saying. This is not going to be a joking matter because I've been saying this for long as a while to buy crude oil. Now for Bitcoin, I think that there should be some selling soon. Why? Because KSI is red, but KCX is blank. So it contrasts each other. But from the way it couldn't stay above 21,500, I got my reservation. And if it stays below 21,222, the first target will be 20,699. That's a pivot 2. You don't want the market to go below it, because once it goes below it, the selling will bring it out to all the way to 18,500 again, because it's a stack over here. Okay, no kidding. Yep. Alright guys, apology, I haven't been updating Ethereum. I'll do it tomorrow. Alright, so wish you all the best in trading, and I'll see you tomorrow. This is Kel signing off. Thank you for waiting. Bye bye.